The stock market is filled with individuals who know the price of everything, but the value of nothing.
Graham emphasizes the importance of focusing on the underlying value of investments rather than being swayed by short term market fluctuations.
An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return.
Graham highlights the essence of investing in assets that offer a margin of safety and a reasonable rate of return.
In the short run, the market is a voting machine, but in the long run, it is a weighing machine.
Graham emphasizes that while market sentiment can drive short term price movements, the true value of a company will eventually prevail.
Buy when most people, including experts, are pessimistic, and sell when they are actively optimistic.
Graham advises investors to go against the crowd, buying when there is fear and selling when there is excessive optimism in the market.
The investor's chief problem, and even his worst enemy, is likely to be himself.
Graham emphasizes the importance of self discipline and emotional control in investing, as our own biases can lead to poor decision making.
The intelligent investor is a realist who sells to optimists and buys from pessimists.
Graham suggests that investors should take advantage of market cycles, selling to those who are overly optimistic and buying from the pessimistic.
The best way to measure your investing success is not by whether you're beating the market, but by whether you've put in place a financial plan and a behavioral discipline that are likely to get you where you want to go.
Graham emphasizes that true success in investing comes from having a well thought out plan and sticking to it rather than focusing on short term gains.
The stock market is filled with individuals who know the price of everything, but the value of nothing.
Graham reminds us that knowing the price of a stock is not enough. One must understand the intrinsic value of the underlying business.
The investor who permits himself to be stampeded or unduly worried by unjustified market declines in his holdings is perversely transforming his basic advantage into a basic disadvantage.
Graham warns against panicking during market downturns, as it can lead to irrational decision making and missed opportunities.
You are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right.
Graham emphasizes the importance of independent thinking and relying on thorough analysis rather than following the herd mentality.
Investing is most intelligent when it is most businesslike.
Graham suggests that investors should approach investing as if they were buying a business, focusing on the underlying fundamentals and long term prospects.
To achieve satisfactory investment results is easier than most people realize. To achieve superior results is harder than it looks.
Graham acknowledges that basic investment principles can lead to satisfactory returns, but achieving exceptional results requires additional skill and effort.
The true investor welcomes volatility.
Graham highlights that instead of fearing market volatility, a true investor sees it as an opportunity to find undervalued assets and make profitable investments.
Investing isn't about beating others at their game. It's about controlling yourself at your own game.
Graham emphasizes that successful investing is not about outperforming others, but rather about maintaining self control and sticking to a well defined strategy.
The market is not your mother. It consists of thousands of minds who are analyzing, comparing, and deciding every day.
Graham reminds investors that the market is driven by collective actions and decisions, and it's important to approach it with objectivity and critical thinking.
The investor's chief problem, and even his worst enemy, is likely to be himself.
Graham emphasizes the role of emotions and biases in investment decisions, cautioning investors to be aware of their own weaknesses and strive for rationality.
Have the courage of your knowledge and experience. If you have formed a conclusion from the facts, and if you know your judgment is sound, act on it.
Graham encourages investors to trust their own analysis and decisions as long as they have thoroughly considered the available information and have confidence in their judgment.
Investment is most intelligent when it is most businesslike.
Graham reiterates the importance of treating investing as a serious business, focusing on fundamental analysis, risk management, and long term value creation.
The stock market is filled with individuals who know the price of everything, but the value of nothing.
Graham reminds investors that the true worth of an investment lies in its underlying value, not just its price, urging them to focus on intrinsic value rather than short term market trends.
Successful investing is about managing risk, not avoiding it.
Graham emphasizes that investing inherently carries risks, but successful investors are those who skillfully manage and mitigate risks through prudent decision making and diversification.
You do not have to trade with the crowd. You can be a successful contrarian if you have patience and discipline.
Graham encourages investors to think independently and consider contrarian strategies, highlighting the potential for success when one has the patience and discipline to go against popular opinion.
Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas.
Graham advises investors to approach investing with a long term perspective and avoid seeking short term excitement, as true wealth accumulation requires patience and sound decision making.
The stock market is a voting machine in the short run, but a weighing machine in the long run.
Graham emphasizes that while market sentiment may drive short term price fluctuations, the true value of a company will be reflected in its long term performance and fundamentals.